How you doing, everybody? This is Kurt Henry at the Mortgage Center with my dad Randy, and this is a weekly mortgage update just to let you know what's going on in the mortgage market. So right now there's a lot of talk about mortgage rates. A 5-year fixed rate is in around 3.29, might be a little bit lower, and then there's the talk about the 2.99. So I just wanted to give some background on this 2.99% that a lot of people are talking about. So from a broker perspective, which is what we are, is we work with multiple banks and lenders, so we have a broad spectrum where we can go to when we're arranging a mortgage for somebody. Now, when you're working within a bank, you might not necessarily know the intricate details or differences from one bank to another, even though you'll probably know your bank very well, but maybe not the others. So from a broker perspective, it's a little different because we know the differences and we look at them every day, the differences from bank to bank in terms of the mortgage that they offer. So from a broker perspective, we have this broad spectrum of mortgages that we can arrange for somebody. So let's just say on one spectrum there's the borrower where their credit is really good, you know, their income's good, their job's good, they got the down payment, whatever the case is, or even if they don't have the down payment, it might still be okay. But they might get like an A-type mortgage. So an A-type mortgage is where it's probably a good rate, and also there's a lot of options within that mortgage. So if they wanted to move to another house, they could probably take the mortgage with them, or if they wanted to sell their house, whoever's buying their house could probably take the mortgage over for them so that there's no penalty for them to pay it off because they're not paying it off, they're just giving it to somebody else. Or they might have the option to increase their payments. They can pay the mortgage down quicker, which can save a lot of money in interest. Or, you know, if they want to do renovations, or if they want to put a pool in, or whatever the case is, they might be able to increase their mortgage to get some extra money with no penalty and very little cost, or no cost to do that. So that's an A-type mortgage. Now on the opposite side of the spectrum, there's a B-type mortgage. So that's where somebody's credit is not really good. Maybe they've had some collections, maybe there was a bankruptcy, or maybe their income's not very easy to prove, or if they're a little bit tight in terms of being able to qualify, then that kind of situation would be like a B-type mortgage. So a B-type mortgage is one where the rate would be slightly higher, and they would strip the options out of the mortgage. So there wouldn't be the options that an A-type mortgage would have. In fact, some of the B-type mortgages are what they call locked-in mortgages. So there's no way to get out of that mortgage unless you sell the house. So if you wanted to do renovations, or if you want to increase the mortgage, or if there was a separation, divorce, whatever the case is, you can't necessarily get out of that mortgage unless you sell the house. That's a locked-in mortgage. So what's happening right now is some banks are offering 2.99%, which is a really good rate for, say, a 5-year term, but they're giving a B-type mortgage. So make no mistake, it is a good rate, but it's a B-type mortgage where normally that mortgage is meant for higher risk type borrowers. So even though when people are signing up for a 5-year term, you're not planning on doing anything within the mortgage within that 5 years. However, on average, people will change the mortgage at the 3-year mark. So for those people that would want to change around their mortgage, if they're in a locked-in mortgage and they have a good rate, even though they have a good rate, they're going to be very, very unhappy to find out that they're in a locked-in mortgage and they can't do anything about that at that point, at that 3-year mark, when they want to or they need to do something within the mortgage. So just bear that in mind. There is a difference. It's not just about the rate, it's also about what you're getting for that rate. Sometimes the option will come where, say, there's a 5-year rate of 2.99% with no options in the mortgage, but then maybe there's a 4-year rate at 2.99% with all of the options in the mortgage. So you might choose to take the 4-year rate instead of the 5-year rate because, yes, the rate's the same, but you get more options in one compared to the other. So there is some options there as well. So in terms of a variable rate, it's in around 2.9%, or in that range, a little bit higher, a little bit lower, depending on the bank and the situation. So if you have any questions on that, feel free to give us a call. The number at the office here is 905-436-8010. Thanks, and have a great day.